Hello, hello, hello. I don't know about that light there. Let me see if I turn those lights down a bit. Better. Or let me do this. Oh, not good. Whatever. I'll turn them both off. How's it going? I haven't done one of these in a long time. I don't really like doing them. Somehow in the morning, I think I'm going to like it. And then a few hours later, I think, why did I decide to do this? But I have a lot to talk about. It's been a couple months. So there's two things I'm really excited about. And then I should update you on all the rest of my shit. Really, Maisie? Right when I start? The gardener might be here. And my wife might show up at any time, and I'm in the middle of the living room. So that'll be interesting. Let's get started. My new idea, which everyone on Twitter already knows about, but I have not done a YouTube on, is another piece of shit biotech with the ticker PRTA. Prothena is the name. And this one is a little bit different than the previous piece of shit biotechs that I have talked about. And the reason why it's different is I have strong conviction that they are going to do the right thing. So let's do a little background on Prothena. PRTA, it's $5.85, and there are about 55 million shares outstanding. They had a lead drug that read out in May, and it failed. And the stock went from, I don't know, mid-sevens to mid-fours on that readout. That was a phase 3 drug, and it failed spectacularly, though it has nothing to do with the rest of their pipeline. In that press release, when it failed, they put it out Friday afternoon, they said that they were going to have significant layoffs that they were going to announce in June, and they were going to what the exact language is kind of important, so I'll give it to you. The chairman said they were going to in June, the company expects to provide details of plans to reduce ongoing operating expenses. The results of the company's review of its business options will be communicated as appropriate once the analysis and plans are finalized. And it says in the paragraph before, the company and board have begun the work to thoughtfully and expeditiously decrease spend, including but not limited to an expected substantial workforce reduction, and evaluate with its financial advisors business options in the best interest of its shareholders. The layoffs came last week, and they laid off 62% of the employees. And in that layoff press release, it was June 18th, it was 8 days ago, they said, the board, management, and company's financial advisors are collectively evaluating a comprehensive range of business options to best serve the interests of its shareholders that consider the implications of multiple recent and upcoming milestones, including, and then they list 6 different milestones. We're going to go through the value of the company in a minute. So what's the negative with this company? What's the reason why I think the opportunity exists? So the board and management combined, I believe, own 25,000 shares of the company. Okay. Now, the CEO has massive options that begin around $13 or $14 up to $17. The stock's $6. Okay. Now, they like hundreds and hundreds of thousands of shares. It might be up to 1 million shares of options. Now, up until a couple of days ago, I didn't think those meant anything. But there are many outcomes here where this stock is worth, quite frankly, multiples of $15 a share. And we're going to go through why in a second. But let's talk about all the different buckets of value with PRTA. Now, again, you have to look at this under the lens of that they're going to do the right thing. Once you have that view, it's extraordinarily hard to see how you can lose money in this stock. So the only asset they own that is not partnered is a drug called 012. Okay. And they have spent like $300 million on this drug over the last few years. It's only in phase 1 trials for Alzheimer's, which is just crazy. And it's an open label study, and they have not actually shared any data yet, and they're going to start sharing it in August. It's widely believed that this drug is a zero. Okay. And the good news is that if it's not a zero, it's immensely valuable. But I'm told it might cost $1 billion to get this to market with a partner. And it's extremely unlikely a partner is going to want to pick this up and spend the $1 billion to take it to market. That being said, I've been told by the company, and it was just in a Jefferies note as recently as last week, that they will not bring this drug to market or move it forward to phase 2 trials alone. They will only partner it. Okay, so either it works or it doesn't work, and they're going to partner it or they're not going to partner it. But there's no risk of any more money being spent on 012 in the future. When 012 is gone, they literally have no other drugs in the pipeline. They have a vaccine that's 123, and that has been sitting in the pipeline for almost 2 years now with an IND cleared. And there's no plans whatsoever to take that into the clinic without a partner. Okay, and they just laid off 62% of their staff. So there is no company with their wholly owned drugs after 012 reads out and they decide to partner or not partner. Okay. Then there's nothing to spend the money on. If you look forward to the end of this year, they should have about $5 a share in cash. I'm being a little conservative with that. It could be a little bit more than that, but we're going to use $5, okay, versus the $5.90 it's trading at. And the burn should be virtually zero at that point. There's going to be way more layoffs, okay? It makes perfect sense that they would keep the 38% of the staff for the things we're going to discuss in a minute, because they do have partner programs. And one of the partner programs they actually have to do the work on. They haven't given it over to Bristol Myers yet. They also have to do the business development on 012 and the business development on all the rest of their assets. So they need to have a staff. They have to have a chief accounting officer. They have to have a CFO. They have to have the chief business officer, et cetera. Speaking of, by the way, 2 of the employees they laid off last week was the head of human resources and the head of regulatory. Okay. You don't fire the head of regulatory and the head of human resources if you're planning on having a company as a going concern going forward. And if you read the press release from the corporate restructuring, they don't even try to pretend like they have a going concern here. Okay. Further, if you go to their deck that came out last week when they did this restructuring, sorry, the deck's not from the restructuring. The deck is from when Roche, I'm going to get to all this in a minute, announced that they were moving forward in phase 3 with their partner drug in Parkinson's. They rearranged the slides in the deck from when before the previous deck, they focused on 012. And in this new deck, the first 10 slides are all on the partnerships and on the upcoming milestones for the partnerships. And then they talk about 012. So they're almost preparing the company to be either a holdco with these partnerships or to liquidate the company either with cash and with the partnerships being sold to the respective partners. But I'm getting ahead of myself. So what is this worth? Okay. So $5 a share in net cash at year end, not today, at year end, with a very low burn going forward. Okay. Versus the $5.90 stock price. Okay. What do you get for that 90 cents? Hey, what are you paying for that 90 cents? First of all, you have a partnership with Bristol Myers, okay? And Bristol Myers has been this partnership with them for many years. And they have opted in to 2 different drugs, one for Alzheimer's and one for an undisclosed target, both in neuro, okay? The Alzheimer's drug is already in phase 2, and Bristol Myers is paying for all of that development going forward. And Bristol Myers has already paid, I believe, $130 million to Prothena to make it to this stage. So the way that this partnership worked was when they opt in to the original drug, they pay like $85 million, and Prothena has to run the phase 1 healthy volunteer trial for that $85 million. They get the $85 million for that. Then if Bristol Myers wants to take it to phase 2, they pay $55 million to Prothena, and then they take it over. They did that already with BMS 98446. Okay. So they've already spent $135 million on that. and they're funding the entire phase 2 trial. And that reads out in 2027, which would be proof of concept. Okay. You decide what that's worth. Alzheimer's drugs are incredibly difficult to get to commercial status. They almost always fail. But Bristol Myers has already spent $135 million just in licensing fees to Prothena. And then they've also spending all this money to run this phase 2 with like 300 patients in it. You come up with the number, okay? They then have a second drug that they opted into in 2024 that is in phase 1 trials. That's PRX019. And that's going to read out in the first half of 2026. If that's successful in the healthy volunteers, which is a pretty low bar, they then will pay Prothena $55 million, and they will take it over and run a phase 2 trial. You can decide how much that's worth. My belief is that both those Bristol Myers drugs combined are worth at least $4 a share to Prothena, or $220 million. Okay? And they could be worth as much as $10 a share to Prothena from an NPV perspective. Okay? But at the very least, I think it's worth $4, $2 for each drug. Okay? The drug that is going into from phase 1 to phase 2, they're going to have to spend $1 a share just to get it to phase 2. And mind you, each of these drugs has like $550 million in milestones and royalties, and Prothena is eligible for high double-digit royalties if approved. And again, no cost to them whatsoever to take it from today to commercialization, except that they have to finish this phase 1 drug trial for PRX019. Okay, so that's Bristol Myers. There's a bucket. You figure out what that's worth. The most interesting asset they have is this Roche drug that's being tested in Parkinson's. So this partnership goes back over 12 years to 2013. And they've been working on this drug for 12 years. And there's been 2 phase 2 trials, one phase 2 and one phase 2B. And the phase 2B read out last December. And it just missed stat sig. Okay. And it did even better in a 70-something% subset that was on previous therapy with another drug, background therapy with another drug. Roche announced 2 weeks ago that they were moving forward into phase 3 development for this Parkinson's drug. Now, it goes without saying that approved Parkinson's drug is a blockbuster asset. In fact, Roche has in their own deck, they only have a few buckets of what things could be. And they had this worth more than $3 billion peak CHF sales if it's approved and commercializes. Okay. I think it could be north of $5 billion. It's pretty conservative, I think, quite frankly. The question you have to ask yourself is, how likely is this drug to work in phase 3? And the crazy answer I have for you is, I think it's more likely than not. And I'll tell you why. So they have 2 very robust trials with the phase 2 and the phase 2B. Okay. And they have data on many, many hundreds of patients. I think the phase 2B was I think it was 700 patients. Okay. And they have long-term study data for years on both of those trials, specifically the phase 2 drug. For this to hit phase 3, it's my belief is all they have to do is power it correctly based on the fact that they know there's an effect, both biological and clinically, from the phase 2 and the phase 2B trials. Now, the bear case here is that the effect is minimal, right? But there is an effect. And if they can power it big enough, which they will, and they make sure the trials run long enough, same thing as powering the N and but it's a function of N and how long the trial is going to run for, they're going to hit stat sig here. Okay. And the drug has been tested in, I think, a couple thousand people at this point. So the odds of a safety side effect are low. Okay. So your only question is, how long does it take to get this phase 3 to show a positive readout? And it could take 3 or 4 years from today. Okay, a long time from now. But when that happens, you're left with an incredibly valuable asset. Okay. Prothena has the right to tiered royalties starting with high single digits up to high double digit teens worldwide on sales. Okay. They also have the right to over $1 billion in royalties and milestone payments. Finally, they have a right to co-promote it, which is very confusing because they opted out of that right 4 years ago, but their decks still say they can co-promote it. And my understanding is that Roche has to pay for Prothena's sales force. And most interestingly, the company will tell you that, and this is normal, is that if Prothena is sold, that right to co-promote transfers to the buyer. So you could be looking at a drug with $5 billion in peak sales, okay, throwing off a royalty of $750 million a year with kind of a 10-year lifespan to it. The NPV is astronomical if your probability of success is anywhere near what I think it is, which I think it's greater than 50%. Okay. So your question you have to ask yourself is, what is this worth to Roche to take back in this partnership ahead of their phase 3 start, which is going to start this year, so that they don't have to deal with those royalties, milestone payments, or potentially another pharmaceutical company wanting to co-promote it with them, right? If Bristol Myers were to buy this company, they would take over the 2 Bristol Myers assets they already own, save them $500 million in milestone payments on each of them if they work, and double-digit royalties. You know, what's that worth to Bristol Myers? I said I think it's worth between $4 and $10 a share. But what's it worth to Roche to take back in that partnership so that they don't have to worry about paying off this gigantic royalty stream for years to come, in what I believe they also think is a rather likely chance that this drug works in phase 3? To me, it's certainly worth at least $5 a share, which is $250 million. Okay. To give you some context, if this works, that value of the Prothena royalty and partnership is in the billions. Okay. If you just use 4 times peak 5 billion sales at 20 billion, and you assume the Prothena partnership captures a quarter of that, it should capture more than that because it'll be a blended kind of mid-teens royalty right off the top. It should be worth at least a quarter of that not NPV, but that shorthand peak value. That's $5 billion. Okay. If it's worth $5 billion, again, a few years from now, it's definitely worth $250 million a day to Roche, risk adjusted and discounted. So that's $5 a share. So now we've got, if you're playing along at home, $5 in cash, $4 to $10 in Bristol Myers value, $5 in Roche partnership. We're not done yet. They have another asset with Novo Nordisk, which is in our favorite indication, ATTR-CM, which is the Bridge Bio drug. And I have no idea what that's worth. The good news is they're about to read out a phase 2 trial imminently. It should be in the next 1 to 2 months. If that phase 2 trial reads out positively, I have no idea if it will trigger a $1 a share payment to Prothena when they start their phase 3 trial. That partnership is structured without royalties, but there's up to $1 billion in future royalties and milestones if that drug gets approved and sells. What is that worth? Let's call it $1. Okay. I have no idea. And then finally, you have this value in 012, which I have at 0. Okay. Put it all together. You got $5 in cash, $5 for Roche, and $4 for Bristol Myers, and $1 for Novo Nordisk. That's $15 a share versus $5.90. And the beauty of the idea is that based on the company's actions and words, you can do a phone call with them. They are planning on monetizing this company in some manner. Okay. Now, I don't know if that means they're going to sell the whole company. I don't know if that means they're going to try to sell off the partnerships. I don't know if that means they're going to take it down to a slimmed down version of a holdco where it just holds the partnerships. But no matter which one of those 3 things they do, that doesn't change that value of $15 today. Okay. You might not get $15 in cash today, but I can assure you that that Roche NPV is at least $5, likely much higher than that. Okay. I can't tell you what the Bristol Myers partnership's worth, but I feel very confident it's worth at least $4 a share. And then I feel really good that come the end of the year, once they figure out what the strategic review unfolds, a lot of that $5 will go back to shareholders, probably as much as $3 or $4, because they don't need $100 million on the balance sheet to run a $5 or $10 million annual cash burn to see what happens with the rest of the partnerships. In the worst case scenario, they need to wait until the phase 1 Bristol Myers drug reads out in the first half of next year, and then they can continue taking the company into a shell company where they only have, a couple of employees and a couple of board members. I'm not sure that's what's going to happen. I think the assets are pretty attractive. I think that the partners would be more than happy to buy out the partnerships. I don't think there'll be a huge bid-ask issue for those assets. There could be with Roche because it's very, very valuable, and shareholders might want to hold on to that. I mean, I would love to own that asset as a CVR. And guess what? It basically is a CVR. It just might be publicly traded. There was a company that did this called ticker MAC, M-A-C-K. It was exactly the same situation. They had one asset. It was partnered. They went into a shell company. That asset hit on its readout and commercialized, and all the cash flow flowed through the shell public company to shareholders and dividends. And that is what they could do here if they wanted to. So yeah, in conclusion, I think we might get long-term capital gains here, because if they don't sell the company, in the worst case, I think they sell the company in the next 3 to 6 months, and I get short-term capital gains and the stock more than doubles. In the bad case, in my mind, they don't do anything with the assets, but they slim down the company to be basically a shell. And I'll get $3 to $4 of my cash back, and the stub will hold both Bristol Myers drugs, the Roche drug, and the Novo drug, and those are worth many, many multiples of what the stub's going to be trading at. The $2 a share I'm paying for it right now, net of the $4 of cash I'll be handed back. Plus, don't forget, there's up to $2 a share in milestone payments next year, $1 for Novo and $1 for Bristol Myers. And the Bristol Myers one is probably likely to hit. I don't know about the Novo one. So I love this idea. It's a 35% position. I would make it even bigger if there wasn't margin involved. I was buying it up to $6. I would still be buying it. It's no question my favorite idea today, because from a risk perspective, anything could happen in the world in the next 6 months, and all those values should still be there. And you have a path to crystallize the value because you have good actors, it seems, right? They're not bullshitting us. They laid off 62% of the staff. They're not saying things in their press release like, we're really excited about developing the next Alzheimer's drug from scratch, or we think we have a great company, going forward with these assets we're going to wholly own. They're just not saying any of those things. And guess what? They don't have the money for it. And they don't have the money to use to buy a new asset, right? They're not sitting on $1 billion. They're sitting on $300 million. So you don't have that risk either, where they're going to do some sort of weird reverse shell merger. Wow, I cannot believe I've been talking for 25 minutes about this. Very passionate. Let's see some questions. I joined early to pledge Twitter acceptance and catch the party people greeting live, of course. Hey, Carlos. Sure. Just tell me what your Twitter handle is and I'll accept you. Just put it in chat. Do you know what I am? It's given to tweet. Hi, Matt. I'll get you to great work. Yeah. Anybody on here right now, just tell me your Twitter handle and ask to follow me and I will accept you. On PRTA, how could you lose money in the stock? Nothing remotely realistic comes to mind. You have been screwed by management many times, so maybe you could think of some. What is the best strategy for the CEO's options? It seems like dividending out over time as holdco does not allow him to strike. So it does, actually, because his options don't expire until 2030, 2031, 2032, whatever it is, right? So for him, the best options for him would be let's make this a holdco and wait to see if the Roche drug hits and the stock goes to 50 or to 100 if that happens. But I don't think he's necessarily in charge. I think the CEO, the chairman is new. So it really brings me to a good point. The chairman got hired last year, and the chairman is the real deal. He's worked on real boards, and he has a real resume. So it's my understanding that he's not fucking around here, and they are going to really run a real strategic process. And I don't see how you get screwed here, is basically what I'm telling you. Because I'm completely fine with them selling none of the assets as long as they slim the company down to a shell. And if they do that, great. Mac was different because there was no royalties involved. That wouldn't change anything here, would it, Dan? I mean, as long as it's a shell, they could pass the royalties through. They can still collect them and dividend them out. It just doesn't change that aspect of it. I would think at some point you would get Roche to buy the shell, right? Maybe it's post phase 3, maybe it's post approval, but once it's de-risked and there's an understanding of what the value of that royalty stream is, Roche can just buy it, or you could sell it to a royalty company, and there's a million things you could do with it once you know if the drug's approved or not. So yeah, the answer is I do not know how you get screwed here. They're not lying to us. They've already done 62% layoffs, right? There's no readouts coming. You could wake up with a safety issue in the Bristol Myers drugs. So those would then zero out. There's 2 of them. So you need there to be a safety issue in both of them. The phase 2 drug has been tested now for a few years. I think the odds you wake up with a safety issue there is rather low. The phase 1 drug has been in testing for a year now. There's been no safety issues. But of course, that's the whole point of phase 1. It's accelerating doses in healthy volunteers. So you could definitely wake up with a safety issue there. But that wouldn't really impair this idea in any real way, right? The bulk of the value is in the Roche drug. And the Roche drug is moving forward. And they're not going to start phase 3 testing until later this year. So there's no risk of waking up to a Roche safety issue. And they've already tested that in like 2,000 people. If the plan for PRTA will be to realize the value via sale, whatever, shouldn't we see insider buying? It's a great question, Roger. They are certainly restricted right now. They're doing a strategic process right now as we speak. So they can't purchase stock. There's no question about it that they are. And they also have 012 data that's open label. So they have data for their lead drug that hasn't even been presented to the public until August. So they can't buy, even if they wanted to buy. Seems not needed, but there are any key shareholders that can help ensure a good outcome? That is a fantastic question. Okay. So what's so interesting about this one is our friends at eCore1, if you want another negative, okay, our friends at eCore1 used to own 15% of this company, or 20% of this company. And they were on the board. He resigned from the board in December of last year. And he sold half of his stake in early May, right before the readout. Okay. But he kept 9.9% of the company. And then he sold the other 10% starting in after hours the minute the readout failed. And he owns none of it anymore. Okay. So you might say, well, eCore1 just doesn't want to own liquidation turds. But it's not true, because eCore1 bought a ton of ITOS after their lead drug failed. And they were right. ITOS announced a liquidation. eCore1 also owns GLPG, which is kind of a cash shell quasi-liquidation. So your risk here would be, if eCore1 doesn't want this, why should we believe in it? Well, eCore1 has basically been proven wrong here, okay? They sold in the 4s before Roche decided whether they were going to move forward or not. They sold in the 4s before the company announced the layoff news. They sold in the 4s before they had any real visibility into what was going to happen from a strategic perspective. So I'm not at all concerned that eCore1 blew out. What I am really excited about is ARVN recently has an activist shareholder, and their name is Logos Capital Management. I believe that's it. Yes, Logos Capital, which is a billion plus biotech specific hedge fund. And they issued a 13D on ARVN about 3 weeks ago, basically saying they want a liquidation and no small sum. I'm going to talk about ARVN in a bit. Well, guess who just filed a 5% position on PRTA with a 13G? It is none other than Logos, which is fantastic because you know that they're an activist. They just haven't changed it to a 13D because they don't need to, because they're acting as good actors right now. Okay. I also believe I know other shareholders that have significant size in PRTA that are definitely pushing them in a similar direction. Okay. So I feel good about the shareholder base of PRTA. I just think it's important to mention that Ecor One sold their whole position. And you don't want to see that. Okay. They did it with ARVN too, as you all know. So let's say I'm wrong about everything. They don't do anything strategic. They don't lay off any other employees. And you're sitting here at the end of the year. What are you sitting here with? I honestly don't even know how that's possible. But if that happens, you have a larger cash burn. So maybe they burn $100 million a year versus the $300 million of cash they have. Okay. But everything else is the same. You still have all those assets and all those buckets. Okay. Where does the stock trade? I don't know how it's below $6 still, right? You're burning $2 a share on your $5 a share cash balance. You'll end 2026 with $3 a share in cash. Your value of Roche and your value of Bristol Myers increases with time because you have to move the numbers forward. The discount rate changes from when you're going to get to market on those drugs if they work. So yeah, I don't really know what your risk is. I know that just sounds crazy, but I don't know what your risk is. What is fair value here to me today? I think fair value today is between $8 and $10 a share. And I wouldn't sell it there because I think that $15 is a real number. And I want long-term capital gains, and I want to see it come to fruition. So I honestly cannot believe I've just talked for half an hour on this one name, but I love it. So let's move on to my second favorite idea right now, which is none other than Sage. Why do I like Sage? Didn't they just announce a deal with SCPN 10 days ago? Isn't this one over? So Sage to me is super interesting here, okay? So to give you some background on Sage, I've done a lot of YouTubes on this, so I'm going to go really briefly. Sage is a 10% shareholder in Biogen, and they have a 50-50 co-promote with Zurzuvae, which is an antidepressant for postpartum depression, okay? In January, Biogen went active on Sage and offered like $7.22 to buy the whole company, which was below cash at the time. Sage did a full strategic process, they claim, and announced 10 days ago they were selling to SUPN for $8.50 a share plus $3.50 a share in CVRs. Those CVRs, 50 cents of them, are Japan approval and first sale for Zurzuvae, which we should find out around September of this year. And then the other $3 are in sales milestones that are very unlikely to be hit. They're extremely high, okay? I value that CVR at somewhere between 35 and 55 cents. Why don't we call it 40 cents, okay? So fair value today, if the deal was to close, is worth $8.90. You have to do a discount for that because it's not going to close for at least 6 or 8 weeks probably. So call it today, it should be trading at $8.80, okay? But it's trading at $9.20. Why is it trading at $9.20 when it's $8.80, okay? The reason is that SUPN has no business owning Sage, okay? The only company that should own Sage is Biogen. And that's because Sage has no valuable assets besides Zurzuvae. It's the only thing of value in the whole company. And nobody but Biogen can extract the most synergies from Sage. They already own 50% of Zurzuvae, and they have a shared sales force, okay? With Supin, they're going to still be a 50-50 partnership with Biogen and have a shared sales force. This is not at all synergistic, okay? Synergies come when you wholly own the drug and you can control it all on your own. Okay. Further, Biogen is a $20 billion company with a lower cost of capital than SUPN, much lower cost of capital. Okay. SUPN is a $1.5 billion company. Okay. Anything SUPN can pay, Biogen could pay more. And that's not even counting the fact that they already own 50% of the drug and there's synergies there. I'm just talking about in a normal arm's length transaction of a random drug, Biogen can pay more than SUPN can pay. So what's going on here? Why didn't Biogen win the auction? They clearly were given a look at Sage, right? The bankers didn't ignore them. All I can come up with is that Biogen didn't think anybody else would buy this. They didn't believe the bluff from Sage. And they said, sure, sell it to a third party. Nobody else is going to want to buy this. And Sage came up with some ridiculous convoluted structure with these CVRs to make the headline number look much better, which is $13 or $12.50 a share. $11.50, $12, 12. I can't even remember what it is. $3.50 plus $8.50, $12 a share. I think it's more than that. But anyway, $12 a share. And they told Biogen whatever they offered them. Maybe they offered them $9 in cash. We have a better bid with this $12 package. Okay. What can Biogen pay for this? And why haven't they outbid yet? Well, first of all, they would never outbid until they see the background. And the background's going to come out in a preliminary filing in the next week or two. Okay. Once they see the background, they can decide how much they should pay for Sage, or at least bid for Sage. Okay. And it's my belief they could pay a lot more. Now, they won't have to pay a lot more because they just have to pay a material amount more than what the Supin bid is to win it. Okay. Now, that gets confusing because unless they do apples to apples, right, keep the same CVR structure and then just raise the cash portion, they have to convince the board that their bid is more than this convoluted package of $850 plus $350 in CVRs. What can they pay? So Zurzuvae right now is run rating 140 million of sales, okay, up from 100 million at the beginning of the year. It's growing about 20% quarter over quarter, and it's accelerating right now if you look at the scripts, okay? It should end this year run rating at $200 million in sales, okay? It seems likely to me this drug peaks between 500 and 700 million in sales. And it's really a defensible drug. There's no drugs currently being tested for postpartum depression in this niche category. Okay. So it's, in my opinion, a high multiple drug. Okay. Most drugs in the past have sold for 4 to 8 times peak sales. That's not really happening anymore. And I'm not really sure what peak multiple sales should be for an M&A transaction. By the way, those 4 to 8 times sales, sometimes that's before the drug even gets approved or before it gets commercialized. Okay. This is a year and a half into commercialization. So you want to have a higher multiple because you're closer to that peak sales number. If we just want to use 3 times peak sales, okay, and we want to use a $500 million number, okay, that values Zurzuvae at $1.5 billion. If we use half of that, which is Sage's number, it's $750 million. There's 65 million shares outstanding. That values Zurzuvae at $11 a share. But we're not accounting the $5 a share in net cash that Biogen will get once this deal closes. I'm being conservative with the $5. That's $17 a share versus it trading at $9. Okay. At 3 times peak sales. Okay. It's currently being sold for about 1 times peak sales. Okay. Now, do I think they're going to pay 3 times peak sales? No. But Biogen basically should never do M&A again if they don't think that this makes sense for their portfolio. They already own half of it. They know the sales trajectory. There's no integration risk. Okay. Usually when you do M&A, you have all of those risks. Here you have none of them. Okay. Biogen should be the owner of this, and I think will be the owner of this. And I think they're going to come over the top of SCPN. I think you're risking in the near term 30 to 40 cents a share. I think you can make anywhere between $1 and $2 a share in the bidding war. And I think there's a greater than 50% chance that it happens. Women take other drugs off label. Yeah, but my question, Dan, is whether or not you could wake up one day to a readout, a phase 3 readout of an on-label PPD drug, and this becomes worthless. And the odds of that are virtually zero. I don't believe anything is being tested directly in PPD right now that can render this worthless anytime soon, is my point. Yeah. I don't think there is, because it's not that big of a market, and it's a hard nut to crack. MMD is a hard nut to crack, and so is PPD. So that's my sage pitch. Buy it. Hope Biogen comes back with a better bid, because it makes perfect sense for them to do it. They have a lower cost of capital. They already own half the drug, and if SUPN can buy it and make it work financially, then Biogen can do it at a much higher price. They'd have to pay a $22 million breakup fee, by the way, which is totally doable. That's like 30 cents a share. You just saw the math I just went through. Completely irrelevant. Does an over-the-top buyout tend to come before stage tender commences, or does that matter? It doesn't matter at all. It just matters that they get it done before the tender completes. But it's most likely to come after they can read the background docs. So I would think it would come within a couple weeks after they can see what how it was shopped and what the other bidders were for the asset. So that's Sage. Next, let's move on to SGRY. I already did a YouTube on this, so I'm going to be brief. It is my belief, I strongly believe this, that Bain still wanted to own this asset. They bid somewhere between $27 and $30 for it. The board rejected it for whatever reason, mostly probably because they know what bids they had for the asset in 2024, and they couldn't legally sell the other 60% to Bain, knowing that Bain can then just turn around and flip it for low, mid, high 30s to these other parties, whether it's private equity or it's strategic. Private equity probably can't pay more than $30 or $32, but it's still north of whatever Bain was willing to pay. Okay. And the reason why I believe this is, if you don't believe that, you have to believe Bain no longer wants to own the asset. And to believe that, you have to believe one of three things has happened, and none of these three things has happened. One, you have to believe the company's business has materially changed since the end of January. It hasn't. Okay. Two, you have to believe there's been government risk. Something changed with Medicare and Medicaid, what have you. It hasn't. And then three, you'd have to believe that the stock market has changed. So there's been macro changes. The stock market is down 20%, 10%, whatever. And valuations have changed. They haven't. All three of those things are kind of factually true. Okay. So if those three things haven't changed, Bain hasn't changed their mind. Okay. And if Bain hasn't changed their mind, you have to take the company at its face that they rejected the bid, and they rejected, negotiations after the bid, which is what the company has told us. So this is very different than Target Hospitality. Target Hospitality, they did not tell us they rejected the bid. They said that TDR never reiterated the bid after they lost the contract. So in my mind, with SGRY at $21.50, you're buying something that a private equity firm wanted to pay $27, $28, $29 for, with no synergies. They weren't going to combine this with a private company. They were going to charge a promote to their LPs at 2 and 20, and they still thought they would get a greater than 20% after fee IRR out of it. And there was going to be no new leverage on it. There's already plenty of leverage on the company, so it wasn't a leverage thing. So I think it's a really good business. I think that has massive roll-up potential, and I have no problem owning it. I think that you will still see a sale in the next 2 years because Bain has to exit. They were always going to have to exit. And I think there's limited strategic buyers. So you have to get one of them to want to do it and not worry about antitrust. But you could exit to a private equity firm at 12 times. And at 12 times a year from now, you get into the mid 30s. It's $35 a share. So I still really like SGRY, and it's my biggest position right now. I have probably a 50% delta adjusted in SGRY. I have a 40% delta adjusted in Sage. It's almost all common. And I have a 35% common position in PRTA. Okay. My next biggest position is ARVN. That's 10% common, but it's 25% delta adjusted because I have a huge amount of July options and a huge amount of October options. We're going to find out really soon what happens with ARVN and Pfizer. Okay. I am no more than 50-50 that Pfizer is going to move ahead and take Vepdeg off their hands, but I'm willing to wait and see. If they don't take Vepdeg, you know, the story is just kind of boring, right? All the things I hope would happen didn't happen, right? I thought we had ECOR1 there to kind of push for a liquidation or sale. They're gone. You do have Logos now with a 13D, but they only own 7% of it. I love that they're there. You have no catalyst with their preclinical, with their pipeline, not preclinical, but their clinical pipeline. So there's no catalyst there. They will not take Vepdeg forward on their own. The question would be, is can they find someone else to buy Vepdeg? My most positive thing with ARVN is Pfizer just launched 3 weeks ago the Vepdeg phase 1, phase 2 combo trial with one of their other drugs, and you can find it on ClinicalGov. So I don't know why Pfizer would have went ahead and put Vepdeg into a phase 2 trial. It's not expensive for them to do it, but if they're planning on walking and handing the drug back to Arvinas, I mean, you certainly don't do that, right? So my guess is there's a real bid-ask issue between the two. Pfizer's playing hardball. Arvinas is saying, hey, hand us back the drug. We don't care. They'll wholly own it, and then they will try to partner it out with somebody else. I don't think that's the case. That's why I think there's still at least a 50% chance that Pfizer does take the drug over and does drop it into their sales pipeline. If they do that, it's a substantial catalyst for Arvinas. You'll see probably costs come down still from here, and you will have either in addition a cash infusion or you'll have a royalty stream on the back end. If you add the Novartis value, if you add the Vepdeg royalty value, or whatever cash they get from it, plus the $12 a share in cash they have today, you have to have some value for the neuro pipeline. There's worse places to be than an $8 stock. Is it my favorite idea? No, it's not. Do I still own it? I do. I have a 10% common, and I have all these July and October calls and call spreads. So we'll see what happens. It's been very disappointing. My original thesis was that Vepdeg was needed by Pfizer. It had a lot of value still with the phase 3 combo trials. All of it didn't happen. Okay. Next, wow. Not wow the expression, but wow the stock. I made that pretty big. That's a 23% position. I know it sounds like I have so much stock out and everything, and I do. I do have a lot of leverage right now. But most of these things are cash shells. I have no idea what's happening with WOW. The market's clearly saying that this bid is dead. I think the setup there is pretty tremendous, given the fact that I think they can't buy it for any less than $520. I think it's probably more likely like $550. It'll trade at a 10% discount because it might take a long time to close. But if it's $520 trading at 10% discount, that's $480 versus $4 today. That's a 20% return, which we could wake up to any day. Okay. On the downside, the stock can go to $3 to $350. Okay. There is tremendous value in WOW. It's levered. The core business is bleeding at 1% a quarter, 1% subs a quarter. But there is this, greenfield opportunity for fiber that is very valuable. And they've already spent hundreds of millions of dollars there. And you still have a 40% shareholder that needs to exit at some point. So it's very cheap. It's like 5 times EBITDA. And that's not giving them any value for the fiber build out. So I like WOW. What can I tell you? I've been really wrong with these squeeze outs. It's been 14 months here, 14 months. And reminder, you had an article at the end of March saying they were getting close at the end of March. And then you had Liberation Day. So, as of the end of March, they were still in talks. There's been no break. At 14 months into this, I would think they would have an incentive to kill this if it was dead. And I think all signs do point to this getting done, right? There's been no material differences in competitors. Charter stock's been doing great. And then you also have no real material differences in interest rates. So I don't know. My next biggest position is KROS. I've restructured that position a little bit. I am very short vol. So I'm short lots of 1250 and 15 September puts. And I'm short September 15 calls against almost my whole position. That's the same thing as being short a September 15 put. Why am I doing this? I think KROS is like dead money. There's $9 a share that's going to be returned to us. It's going to be returned either in cash or in a tender. I don't care which way they do it. I prefer it to tender. I think they're having a problem figuring out which way to do it because they can't tender it. If they tender it and 8R1 doesn't tender, then 8R1 doubles their position from 14% or whatever to 28% or even more because they're returning more than half cash. And they don't want 8R1 to double their position. They can't dividend it out because the CEO owns 30-cent stock options and they can't adjust his strike to negative $8.70. And he doesn't want to exercise them because it'll create millions of dollars in tax liability. So I have no idea what they're going to do, but I have extreme confidence that your downside is completely protected at 1350. At 1350, assuming you're going to get $9 back, which you are, either in a tender or in a dividend, you're paying a stub 450 right now. For that 450, you're getting like $7 in cash and the Takeda deal. That $7 in cash is going to be worth $4 in cash a year from now when there's going to be a proxy that probably overthrows the board. And the Takeda deal is worth probably $10 a share, quite frankly. So your cash covers the entire market cap pro forma for the capital return you know you're going to get. So I consider KROS literally zero risk. I just don't know how much upside there is in the near term. Hence why I'm short so much vol. Short lots of puts, and I'm short calls against Mike Common. And I'll just milk it and get a great IRR for something that has, in my mind, literally zero risk post the $9 capital return. My next biggest position is PTGX. That's just a HODLer for me. I've talked about it a million times on here. It's a 10% position, and I'm never selling it. I think that could be just a ginormous winner in the future. They're about to do a deck on their oral obesity product. Obviously, if that works, it's like a $100 billion company. And they've shown us that they can make these things work. They've had 2 work already. 2 multi-billion-dollar drugs have been successful with partnerships. So they have the platform. So I love that stock. My next biggest position is they're tied. It's SEAT and BBIO. BBIO is a holder, holding that 9% position forever. So no reason to discuss that. SeatGeek, not SeatGeek, Vivid Seats is less interesting today than it was a few days ago. So they filed for a reverse split yesterday, 2 days ago. And that to me means the odds of a short-term M&A transaction are very low, right? You don't have to do a reverse split if you're going to sell yourself either to StubHub or do a squeeze out by their majority owners. I'm not going to go into too much detail about Vivid Seats. Basically, it's a broken SPAC. The business is imploding. They have 2 30% holders, a 125% holder and 1 30% holder. And I think that you're getting great optionality in either of those holders, most likely the 25% holder, trying to squeeze it out. You also have great optionality in either SeatGeek or StubHub just acquiring it because the synergies are just absurd. I mean, you could make it work at 2 or 3 times the current market cap. The problem is StubHub is really levered, and StubHub wants to go public soon. So I don't know if they even have the capacity or the wherewithal to want to do M&A right now. You might get that M&A after they go public. So that's SeatGeek. And that's pretty much my whole portfolio. The other things are much smaller. There's really no reason to get into them. I'll just give you the tickers. They are, again, we are literally now at 3% positions and below. So 3% and below. CYTK, SHCO, SCPN, ROIV, Cure, RGNX, IMVT, CGON, MLYS, and ABVX. And I own 40 basis points of TripAdvisor 2027 leap spreads. So I really like the portfolio today, right? It's SGRY is broken. So I doubt that'll be as big as it is now. a few months from now. But outside of SGRY, Sage is going to come to a conclusion in the near term. So I'll either, I'll be in that or I'll be out of that in the near term. PRTA, I'm fine with holding for the next year or two because I just love the way it's structured. I hope I get long-term capital gains there. ARVN is what it is. I'll get my answer on that in the next 4 to 6 weeks. When July expires, my options are going to be much smaller, and we'll see what happens. WOW is either going to work or break in the next few weeks or month. I have no idea what I'll do there on a break. Probably just hold it and hope that Crestview does something in the medium term there. KROS is like a bond. I'm just kind of holding it, selling vol on it. PTGX and BBIO, they're both already long-term capital gains. I've more than doubled my money on those. I'm holding those forever or indefinitely. And then finally you have SEAT, which is kind of like, I'm less interested in that than I was. So I feel really good about the portfolio. I do have like 100% leverage on from a dollar perspective, though so much of that is Sage and SGRY and PRTA and KROS and ARVN. And these are just all very cash-rich names. So I'm just not as concerned about using leverage there. But, I'm losing money today, right? The market's up 70 to 90 basis points across the board, and my shitcoins don't go up. So it happens. The dog's barking at the gardener right now. I actually have to go in about 5 minutes because I have to put up lunch. Let's see what else we got here. Amazing. Assume your position is in options. Assume your position is options seems hard to time value unlock. Carlos, are you referring to, I don't know what stock you're referring to, positions and options, but I did explain which ones are in options and which ones are in common. No, it's all common. You can't get spreads on that. And I'll tell you why I don't like options in things like PRTA or KROS. Once you have a fixed downside, right, you're not worried about losing money. You don't want to pay for the vol. Okay. You want to sell vol. Okay. Now with PRTA, I don't want to sell 750 calls because I think this is worth 15. But I also don't want to sell 5 puts because for every put I sell, it's one share I can't own, right? From a risk perspective. So I don't want to be clipping 50 cents, 90 cents, 80 cents and selling $5 puts on PRTA when I want to own the stock because I think it's going to double. And that's how I look at all options. Do I see a lot of downside? And then what is my upside? With KROS, I see very little upside and I see very little downside. If I see very little upside and very little downside, I want to be short the shit out of calls and puts. With Sage, there's no way to put any options on, right? But it's the same thing. I see very little downside and the upside, I don't know what it is. It's somewhere between 50 cents and $2. Oh man, this was so good. I forgot about my oatmeal and I've smoked the kitchen and ruined a saucepan. Glad the wife is away. Wow. Thank you. What a compliment. The net cash position that most of your ideas are having a nice base on. Have you ever seen the same risk score last 5 to 10 years factor in macro? I've never seen anything like this in all of my career. The way what's happened to biotech is nothing short of remarkable, right? You have basically a bunch of companies that the market is telling you have no interest in shareholders at all have staggered boards, don't have a lot of ownership on the board level, and they're all telling you they're going to burn it all to the ground. Okay. And in some cases, you have a good reason to believe they might do this, right? KROS probably would have burned it all to the ground, or a lot of it, if they could have, if it wasn't for sheep and 8R1. Okay. Make no mistake about it. Okay. And ARVN so far has not shown me that they're good actors, that they're going to cut more cost and that they're going to preserve this capital because they don't own any stock. So you have this weird situation where you have to find the right cash-rich companies that either have real assets and or are going to do the right thing. Let me talk briefly about SCPN, which is this is a perfect segue into this. Amazing. Into this opportunity set that's out there. SCPN is only a 1.5% position for me. I'm also short July 10 puts. So delta adjusted, it's like a 3% position. The reason why it's not bigger is I simply don't understand, the chemistry and the science behind it. And it's not traditionally something I want to do. But what is SCPN? Okay. So SCPN went public last year. Okay. And it traded in the 20s for most of its post-IPO days. And it traded even in the 20s this year, okay? Their lead drug zeroed in like March or April of this year, February or March this year. When their lead drug zeroed, the stock went to, I think, $5 and traded at half cash. I cannot believe the Gardeners here at the one day that I'm doing this. Traded at half cash, okay? People thought it was a zero, and they were going to burn all the cash to the ground. Well, SCPN, because it just went public, half the shareholder base is the venture capitalists that are on the board. So you're actually completely aligned with them, okay? That's the first thing. The second thing is that they have other drugs in their pipeline that were interesting, and their technology is interesting, that were unrelated to the lead asset that failed. I didn't buy any of it, okay? It wasn't a liquidation, and the burn was still high, and I quite frankly just didn't care or understand it, okay? So what happened with SCPN? They announced 6 weeks ago that they're taking one of their early stage drugs that's not even in the clinic yet. So not even one of their two lead assets that are either in phase 1 or going in phase 1 this year. It's their obesity drug. And they're partnering with Novo Nordisk. And Novo Nordisk is going to pay them $200 million upfront. And the overall package is worth many hundreds of millions of dollars NPV. It's like $500 million for up to 5 drugs each, plus $1 billion in royalties and double-digit royalties, and it goes on and on, okay? But the reason why it's interesting is Novo Nordisk is telling us that this platform has real value, right? They're partnering with SCPN on this one specific area, and I'm guessing it has an NPV to SCPN of somewhere between $500 million and $1 billion. Yet SCPN today trades at near cash value right now, net cash, which is crazy because you know their platform has been validated, not clinically, but by a partner, okay? And then you also have other drugs that are entering phase 1 that people are super interested in. So do I have it as a big position? No. But you can make a really good argument that if this was a private company, it would be worth double what it's trading at right now, easily. It would have a positive enterprise value. So I don't understand, what's going on in biotech. Oh, sorry, I do understand it. I do know why things trade at such shitty valuations, because the boards and the management teams suck. And you have to pick your battles and find the right places. I mean, CYTK, most people think in a transaction that would double, but you have the world's worst CEO and you have a board you can't necessarily trust. So it trades at a public discount of 50% of what it probably would trade at if you had an auction there. That's my answer there. Yeah, you guys ripped PRTA from 590 to 610. I'm so flattered. Talk to Gary about whether that portfolio is good. Oh man, that hurts. Value Hunter 1. Gary was right. MX, I sold out of all of my MX for tax losses. That is my biggest dollar loser and percent loser I've had in my whole career. That was at one point 100% position at 20, I think. So the fact that I did not wipe out my portfolio for that going to $4 is remarkable, that I have whatever risk tolerance or parameters that I have, because in theory, I should be wiped out right now. I took the tax losses and I moved on right around the lows, actually, because I wanted access to other stocks during Liberation Day. I hate the phrase Liberation Day, by the way. Hate it. I don't know what else to say, what else to call that. Orange Man Day? And yeah, seriously, you should be blocked. M. Tepstein, you should be blocked for saying bringing MX here. I don't think any of you guys posted your Twitter names. You have to post your Twitter names on here if I'm going to approve you, because I don't know who you are. LPCN has an investors day on July 9th to discuss their PPD drug, which is starting phase 3 data in next summer. I mean, even then, it probably takes years to read out, Dan, right? If it's starting phase 3 next. Oh, the data comes out next summer? All right. There you go. I'm not too concerned about competition. Let me see. LPCN is a $17 million market cap, if I'm reading that correctly. correct me if I'm wrong, but I'm probably not too concerned about a $17 million market cap reading out a competitive drug. Daniel Rosenbaum. Is it normal for liquidations like Hook to take 3 years to repair after approval, based out of Austria? I don't know anything about Hook. What do you mean, liquidations like Hook to take 3 years to repair after approval? I don't know what you're saying. You mean like if Roche's drug gets approved, we won't get paid anything for 3 years? No, it's not. And also the stock would go up huge on that. All right, let me cook some chicken. I actually had a really good time talking to you guys this time. I'll talk to you again if there's any reason to talk again, but I'm glad I got PRTA out there. I can't believe that took me 30 minutes to talk about it. And I hope you guys have a fantastic rest of your day. Bye.